To further anchor our understanding of how well suited Bitcoin is to take on future challenges, there are some interesting concepts to keep in mind going forward. One interesting concept is the Lindy Effect, whose rule of thumb is that the longer an idea or technology has survived and been used, the more likely it is to have a longer lifespan. The Lindy Effect applies to anything that does not have a natural limit on its lifespan, such as milk, fruit, meat, or the lifespan of a human being. The Lindy Effect says that the older something is, the more circumstances it has become adapted to. Therefore, it adapts to ever wider possible future scenarios, and ultimately a higher probability of surviving longer. In other words, the longer Bitcoin clings to our lives, the longer it is likely to be around as it adapts to more circumstances. In this way, you could say that Bitcoin becomes more and more Lindy over time. And the fact that Bitcoin is becoming more and more Lindy does not mean that it cannot disappear tomorrow. It only means that we have reason to believe that the probability of Bitcoin disappearing tomorrow is low, compared to when it had only been around for a week or a month or a year. Another interesting term that describes Bitcoin is that it is antifragile. If something is antifragile, it means that not only can it endure and resist a shock, but it actually improves and grows stronger as a result of the shock. And Bitcoin becomes more and more antifragile over time. At one level, Bitcoin has endured countless attacks at the protocol level, including attempts by various groups to change the rules of the game. On the other hand, the price of Bitcoin has crashed by over 80% several times, where recovery has been slow, with many declaring Bitcoin to be a failed pilot project over and over again. Bitcoin has endured numerous attacks from the media and financial institutions regarding the currency's raison d'etre, i.e., whether Bitcoin works or will ever work, and whether it should even be allowed to exist, given the network's energy use, anonymity, and other factors. Bitcoin has shown that it is anti-fragile and is growing stronger through all the attacks it faces. Game theory is an important concept to grasp in order to better understand Satoshi's genius. Game theory is used, for example, in economics to understand how different actors act in a given situation, and also to predict how an actor is likely to act in a competing strategic interaction with others. By analyzing the incentives that exist in the Bitcoin network, we can guess how an actor is likely to act. This can be done assuming that all individuals are rational and want to maximize their own utility. Bitcoin uses game theory by consisting of an incentive system that ensures that all rational actors behave in a predictable way by uniting their interests. This consensus is achieved through a so-called proof-of-work algorithm. In simple terms, proof-of-work in Bitcoin means that miners have to perform computationally expensive processes to mine Bitcoin, and thus incur significant electricity costs. The more costly the calculation is, the higher the probability that miners will not deviate from the rules. This is because miners first pay hardware, electricity, and maintenance costs to perform calculations. Only after this cost do they ask the network for permission to include the block they have calculated on the blockchain. This increases the incentive for a miner to be honest, as they can be denied to add transactions if they are fake. then you have done unnecessary costly work without compensation. Another incentive for miners to be honest is that they are rewarded for their honesty in the form of receiving the 625 Bitcoin that comes with each block if you solve the problem first. We have talked about this in a previous section. In addition to this, you also benefit from the transaction fees on the network. The only way for an actor to get on the network and manipulate transactions is to control 51% of all computing power dedicated to the network. To do this, the actor must find expensive hardware, most of which is owned by current miners and is therefore difficult to obtain. To succeed, they must then compromise the network, but since they are highly invested in hardware that is not useful for anything other than maintaining Bitcoin's network, they have no incentive to continue the attack, as it would destroy the value of the Bitcoins they had acquired. In other words, all actors in the network will be better off by following the rules. Not because they have to, but because they stand to gain the most from doing so. This was the genius of Satoshi that perfected the research. Satoshi ensured that all actors in a distributed network behaved according to the rules without having to rely on anyone, because they have the most to gain from maintaining the integrity of the network. Some people don't understand that Bitcoin is money because you can't go to a store and trade Bitcoin today. So it can be helpful to understand where Bitcoin is somewhere today in relation to its ultimate potential. For something to be money according to the current definition, it needs to be a stable store of value, a widely used means of payment, and a unit of account, meaning that everyday goods and services are priced in the currency. It can be argued that Bitcoin is neither of these points. The price is volatile, which makes it risky for companies and individuals to make future calculations in the currency, so it is not a stable store of value. It is not widely used as a means of payment. On the contrary, it is rare to make a payment in Bitcoin if you have other options. Finally, it is extremely rare for a good or service to be priced in Bitcoin. This is what Bitcoin looks like today, but it tells us nothing about the future. One can imagine that Bitcoin will go through 4 stages to eventually be recognized as a currency under the current definition. The following is an excerpt from Vijay Boyapati's book, The Bullish Case for Bitcoin. The first stage is that Bitcoin is used as a digital collectible because it is interesting for many people to own something that is rare. The second step is that Bitcoin is used as a store of value, which we are seeing early signs of. We can see this in countries such as Argentina, Lebanon, Turkey, and Nigeria, where people who know how to go about it choose to hold Bitcoin rather than the local currency because of the high domestic inflation. The next step is that Bitcoin is used as a means of payment where people choose to exchange goods and services for Bitcoin, and the final step is that the price of Bitcoin is so stable that it is used as a unit of account to price goods and services. It is not possible to say when we will achieve these milestones in the future, but we can estimate that we are in the early stages of reaching the second milestone. According to the Lindy Effect, the probability of Bitcoin reaching the final milestone increases with each passing day. Many people are curious about how to value Bitcoin, and there are several opinions about this. One way to look at it is to compare the total value of all the Bitcoin that exists today with the value of other assets that are largely used as a store of value to see if there is more value for Bitcoin to gobble up. Bitcoin currently has a market value of about $1,000 billion. Gold has a market value of about $8,000 billion. A larger portion of gold's value is based on demand for a store of value, beyond gold's use in industry and the jewelry business. This is value that can sit in Bitcoin. According to River Financial, all outstanding currency in circulation, plus deposit notes and other highly liquid assets, have a value of about $40,000 billion. This is value that could potentially be gobbled up by Bitcoin. According to the Securities Industry and Financial Market Association, the total value of all outstanding bonds is about $120,000 billion. Creating and selling a bond effectively means taking a loan from the buyer of the bond. This loan is then paid back with interest. How appealing is it to hold bonds issued with central bank currencies as debt instruments, especially when around 10% of them even have negative interest rates? Negative interest rates mean that you, as a lender, get less money back. Much of this value could potentially be held in Bitcoin. According to Savills Global Research, the total value of all real estate in the world is approximately $300,000 billion. Many people buy real estate for investment purposes or as a safe store of value. If Bitcoin develops into a global standard for storing value, there is a lot to be gained from this market as well. In conclusion, here is a map of Bitcoin's price development over the last few years. As we can see, Bitcoin has had several bubbles and crashes, and it is likely that it will continue to behave this way. At each rise, many are convinced that Bitcoin is not far from taking over the whole world. And at every bottom, many are convinced that Bitcoin was a failed experiment. If you plan to buy Bitcoin, try to see the long-term potential and plan accordingly, according to your appetite for risk and personal beliefs. This is not a get-rich-quick scheme. We will now identify the events that we believe had severely damaged the case for Bitcoin. Bitcoin fails if calculations become free. The fact that Bitcoin requires energy is an essential feature, as the calculations made by all miners maintain the integrity of the network, and making calculations costs energy. At the cellular level in a biological being, RNA molecules are translated into sequences of amino acids. This is a form of computation that costs energy. All computation costs energy to perform. Therefore, if we manage to find a way to make calculations without spending energy, Bitcoin's security model will collapse. Bitcoin fails even if fundamental consensus rules change. The fact that there will only be 21 million Bitcoin, which is fixed from the start, is the most important function that Bitcoin fulfills. Technically, it is quite possible for the limit to change if everyone running a Bitcoin node chooses to update the software with a new limit on the total number. However, we can assume that the probability of this event is negligible, as everyone running a Bitcoin node is interested in contributing to the stability of Bitcoin. Finally, Bitcoin can fail if it is possible to stop tanks. A person can have 12 to 24 words in their head that can represent a value from a few dollars to billions of dollars. With this information, you can travel all over the world without anyone knowing how much money you really have, and no one is able to confiscate the money. But if it is possible to stop thoughts in the future, this is a big problem for Bitcoiners.